Good afternoon, everyone, and thank you for joining us for a really important discussion about the future of employer-sponsored health insurance. Employer-sponsored health insurance is the backbone of the U.S. health system, providing robust and affordable coverage for 180 million families and retirees. An overwhelming majority of those with employer coverage, a full 86%, are satisfied with their insurance, proving it is a highly sought-after employee benefit. It's easy to see why. The flexibility of employer-sponsored insurance allows companies to tailor benefits and coverage specifically for the needs of their workforce. That's incredibly important right now as our nation confronts a pandemic that is affecting different communities, industries, and families in different ways. The Chamber Foundation launched a new series this spring called Path Forward, which has touched on so many of the challenges businesses face in returning to the office. Moderating the series, I've had the opportunity to talk to dozens of business leaders as they respond to COVID-19. And one constant has been businesses' commitment to their employees during this crisis. Rick Roman, an independent movie theater owner I got to talk to, talked about the fact that he really feels that his staff is his family, and he needs to take care of his workers at work the way he would take care of his family at home. One of the ways that businesses do that is by providing high-quality health care to their workers through employer-sponsored insurance. Today, we're pleased to announce the launch of a new campaign, Protecting Americans' Coverage Together, or PACT, a partnership of businesses united around sustaining and strengthening employer-sponsored insurance and raising awareness of the serious threats posed by a potential Medicare buy-in or public option. Through research and advocacy, PACT will promote private health insurance provided by employers. A Medicare buy-in or public option is bad for business and would inject uncertainty and pose direct threats to the nation's healthcare system. By shifting employees into Medicare, a targeted program for the elderly, or forcing them into an untested public health care option, millions of American workers and their families would lose the comprehensive coverage and quality care they depend on for their health. Moreover, it would undermine a key employment incentive at a time when we're trying to get Americans back to work. Chipping away at this proven system would harm workforce recruitment and retention efforts for businesses as millions of Americans rely on insurance from their employer. Through PACT, we are elevating the voice of employers and employees and advocating for meaningful reforms to private health insurance. We're calling on lawmakers to work together to build upon the system in place rather than resorting to changes that undermine healthcare coverage for millions of hardworking Americans. When COVID-19 first caused upheaval for millions of Americans, Congress recognized the critical role of the employer-sponsored insurance program and provided funding support and assistance to American workers so they could maintain their health coverage. In fact, during the pandemic, 81% of voters expressed support for providing federal assistance to help people who lost their job pay for COBRA. Now is the time to bolster the employer-sponsored health insurance, not dismantle it. Today, we're pleased to convene business and policy leaders to highlight the real-world implications of Medicare buy-in and the public option. We want to provide insights and spark action on this issue. We know what a job means to an individual, to a family, and to a community. It means financial stability, personal dignity, and access to health care. It means peace of mind. Through PACT, we will work together to protect this critical employee benefit and ensure the steps Congress takes strengthen employer-sponsored insurance now and into the future. Thank you.
Well, thank you, Suzanne, and thank you all for joining us this afternoon. My name is Neil Bradley, and I'm the Executive Vice President and Chief Policy Officer at the U.S. Chamber of Commerce. Today, I'm pleased to be joined by Alex Brill. Alex is the CEO of Matrix Global Advisor and held longtime positions on Capitol Hill, serving as the Chief Economist and the Head of Policy for the House Ways and Means Committee. For those of you who are not familiar with the way Washington works, what the Ways and Means Committee is really the locust where health policy and tax policy comes together. So he's a perfect person to inform us today about how changes, such as those that Suzanne mentioned, Medicare buy-in and a public option, might affect not just our health care, but our economy and people's wallets and employers. So, Alex, thank you. Thanks for joining us today.
Thanks for having me on, Neil.
So maybe we just start with a little level setting. I feel like the last couple of years, we spent a lot of time, driven by the news media, talking about Medicare for all. And maybe we kind of got our hands around that. But today we're talking about something a little different, Medicare buy-in and a public option. Just take a couple minutes and explain to us kind of the differences and what Medicare buy-in means and what the public option entails.
Sure, thanks. So I'll start just maybe with one step back from there, which is just Medicare as it is. So Medicare as it is a program that folks know well, of course. It's a program providing healthcare coverage for individuals disabled and individuals over the age of 65 and those on ESRD. And it's the largest payer in the U.S. healthcare system. It spends over $700 billion a year on healthcare. It's not half of all healthcare spending, but it's the largest single payer in the system. And the ideas that we're discussing is, as you said, not an outright takeover of all healthcare, Medicare for all, but rather incremental expansions of the Medicare program in a variety of different directions. So one way to expand Medicare is to lower the age of eligibility from 65. You could lower it to 60, or you could lower it to 50. You could lower it really anywhere you wanted. The Medicare for all, of course, lowers it all the way to 0, but incremental changes would take it down from its 65 age to some other lower point. You could do that either just as a straight expansion, in other words, just simply changing the age of eligibility, or you could create a system where people could buy in to Medicare either at a younger age or in a different situation. The public option idea is a different approach to expand federally provided healthcare, to expand Medicare, and would create a program that stands alongside some of the other existing private insurance options. In particular, one of the options that's on the table that policymakers have discussed is the idea of, in the individual market, in the exchange market or the marketplace, letting individuals in that market choose an option which is a program like Medicare. They would purchase that program. But that program would compete alongside the existing exchange plans. And in addition, one could expand the eligibility of who is allowed into those exchanges, and thereby allowing the opportunity for even more individuals to opt in or to purchase a Medicare-like program.
So often these policy debates seem very esoteric and kind of removed from our daily lives. And at the end of the day, what we really want to understand is how changes impact us and how they impact our families and the people that we care about. You authored a report that the Chamber is releasing today that looks at Medicare buy-in and the public option and tries to address some of those questions to understand how it's going to really impact employers, employees, providers, hospitals, et cetera. And maybe we could just take a few minutes and walk through each of those. And you could tell us a little bit about if Washington, if Congress decided to do one of the things that you just described, what it would look like. And I want to start with employees, right? So Suzanne mentioned 180 million Americans receive their health care, their health insurance through their employer or a family member's employer. And this seems targeted at giving them perhaps a, quote, another option if it were a Medicare buy-in. Talk to us a little bit about how this would impact an employee, one of those 180 million Americans, how it would impact those who might buy into the system and also those who would remain with their employer. I assume there's impacts on both maybe you could tell us a little bit about that.
Absolutely, and there certainly are different impacts for different people, depending on whether this is an option that they choose or whether they want to remain in the same program that they have, their employer provided program. First, just a caveat, which is there's lots of ways to go in this direction. Lots of the details are going to matter. Exactly how a future Congress or a future president proposes or enacts such a proposal is going to impact primarily the magnitude of the effects across different stakeholders. But a couple of things that we do know and that we can say in terms of the impact on employees. So for a program that lowers the eligibility age for Medicare from 65 to say 60, as former Vice President Joe Biden is proposing, one of his proposals. This would give older workers that option of opting in to Medicare at a younger age. But it would pull those individuals, in essence, out of their employer-provided insurance and leave the remainder of the workers in that pool affected in some way, because the pool is balanced by the participation of different individuals at different ages and different health statuses. There's an expectation from some of the actuaries that have looked at policies like this that those who might take that option might be the healthier individuals among those who are 60 to 64. The reason is because employer-provided health insurance is oftentimes fantastic, really generous benefits. And Medicare has plenty of advantages and plenty of nice features, but it does require the individual to pay sometimes a significant portion of the costs, generally 20% of the costs. And so if your employer-provided health plan is nicer than that, is more generous than that, then the only individuals that might employee individuals who might opt in are those who are not expecting to have significant healthcare costs, leaving a pool of individuals who might be a little bit less healthy on average. And what that means is that we would expect perhaps that the premiums might go up for everybody else. So some people will take this option, and for them, if they're making that choice, they may consider themselves better off, or at least expect to be better off. This might have impacts on the cost for administering the program for those who are left. One thing that some have claimed might happen is that wages might go up, because as economists know, I think as maybe other regular people know too, the cost of healthcare, the cost of health insurance, while it's provided by your employer, it affects the cost of employment, and ultimately it affects your wage compensation. And so when the cost of healthcare rises, oftentimes in general, what we see is slower wage growth. And so some people have said, well, this would be great if we can just pass off the costs of these relatively costly individuals, because they are older, onto the government. Then that'll free up some financing that could be passed down in terms of higher wages. Broadly speaking, we might see some of that in the aggregate national statistics. We might see that if we remove a cost of having a worker, that worker might benefit in some way as their wages rise. But we shouldn't expect someone to personally capture the value of their foregone employer-provided health insurance, because it's going to be spread across the entire workforce. And so you would lose one thing, and what you would gain would be much less.
So if I were to kind of to boil down, and thank you, by the way, it's a lot of great information. And I know that the report has all the data that kind of that backs up all the things that you just said. But it's not as good as advertised, perhaps, for a lot of people, because Medicare has a lot of costs that an individual has to pay, and generally doesn't have as rich of benefits as employer-provided insurance. And that, in addition, for everyone else, because you're changing the whole insurance pool, you're going to potentially raise the rates that everyone else has to pay, which is going to be borne both by employers in higher costs, but also by individuals in higher premiums and out-of-pocket costs. I want to get quickly to another group that might be affected: healthcare providers. I mean, these are the heroes right now, our doctors, our hospitals. How are they going to be impacted if we have a cohort of people who move over into a Medicare, and Medicare is paying their health expenses?
Yeah, here we have, I think, a more confidence in what the impact would be on the sector. The impact on the sector is negative, first of all, and the reason for that is because the reimbursement rates in Medicare are significantly lower than they are by other payers, by private payers. And so the same service provided, an X-ray or doctor's visit or what have you, a hospital visit, commercial insurers pay much higher rates. People who are 60 to 64, but just people in general, use lots of healthcare services. And when those rates for that segment or a segment of the broader population is reduced significantly, that's going to put strain on providers. Now, providers will adjust to some extent. They may find some efficiencies, maybe. They may reduce their hours. They may reduce their willingness to operate marginally profitable facilities, but they're going to need to adjust. And we think of this sector rightfully as being one that's very large and growing. It is, because we're getting older and, quite frankly, we're getting sicker in some regards. But to simply expect there to be no burden on this system is completely false. We're going to expect, depending on the plan, hundreds of billions of dollars over the next decade in reimbursement to get sucked out. One estimate was $700 billion out of the hospital sector and $300 billion out of other providers.
That's real money.
A public option.
That's real money.
Even today, that's real money.
Yeah. So Alex, I know we got lots of other questions. We're almost out of time, and I know our audience has questions. I just want to let them know that we have a panel discussion coming up, and folks can enter their questions into the Q&A function, and we encourage you to do that. We'll get to as many questions as we have. I want to leave, Alex, you with one more quick question. We're all counting on a vaccine to beat the coronavirus. And, a lot of that research is funded by a lot of the private players that you just described. That's real innovation. Is some of the funding, is some of the efficiencies, could that come at the expense of the innovation that we all want to see in the healthcare system?
I mean, we need a system that is both one that we can finance in the near term, so one that we can afford today. We also need a healthcare system that has the incentives for change. And a lot of that change is the kind of innovation we see in the pharmaceutical sector. But the changes that we want to see going forward are really across the board, as we want hospitals to be more efficient. And they need to be able to get rewards for being more efficient, not just punishments and reimbursement cuts. And so there's definitely a relationship between how we finance healthcare today and the types of innovations we're going to see in healthcare in the future.
Well, thank you, Alex, and thanks for joining us for this part of the program. We have more to come as we move ahead in this program, and I know we're going to have a lot of audience questions to get to, and I'm for certain know that people want to get their hands on the report that you produced and really dig in there. So thank you, Alex.
Great. Thank you, Neil.
Good afternoon. I'm Katie Mahoney, Vice President of Health Policy at the U.S. Chamber of Commerce. And joining me today are Matt Shea, CEO and President of the National Retail Federation, and Kurt Bauer, CEO and President of the Wisconsin Manufacturers and Commerce. We heard Neil and Alex discuss the impact of Medicare buy-in or a public option and the impact that it would have on consumers, hospitals, and providers. It's not hard to understand why this impact is pretty significant, given that Medicare pays hospitals 59% less on average than private insurance. With more people covered by Medicare, providers will see more patients covered by a public program with far lower reimbursement rates. Beyond the harm it will inflict on hospitals and providers, the benefit to consumers is questionable. Bloomberg reported earlier this week that the public option in Washington state has a 2021 premium that is 5% higher than 2020 average Obamacare premiums on the exchange. A RAND analysis found that Medicare buy-in would cause premiums for those remaining in the individual market to rise between 2 and 10%. With today's launch, the Chamber's PACT intends to shine a light on the secondary and tertiary effects of a Medicare buy-in or public option and the impact it would have on employers, employees, and our system writ large. How would these proposals impact businesses, and what is the general sentiment towards these proposals within the various groups? It's extensive. We've heard from our members, and I look forward to hearing from both Kurt and Matt about the impact that they have heard from the businesses that they represent. Matt, in terms of impact these policies would have on retailers, what would this mean for the 52 million jobs currently supported by retail?
Well, Katie, first, good afternoon, and thanks for the invitation to be part of this. And I want to commend you and Neil and Suzanne and the Chamber for taking a leadership role here on such an important topic, and happy to be with you to talk about it today. And as was touched on in the earlier conversation that Neil had with Alex, and as Suzanne said in her opening remarks, the context that employer-sponsored insurance is critical to at least 180 million Americans, I think ought to give us pause before we rush in to make dramatic changes, and particularly at a time like this, as we find ourselves facing an incredible health challenge due to the coronavirus and the impact that's had on American workers, on working families, and on many of those 52 million Americans that you referenced that have jobs because of retail activity in this country. So our concern, obviously, is to not interrupt that. We certainly believe there are things that can be done to improve the existing plans that we offer to our members and that they offer to their employees, the kinds of insurance programs that are out there in the marketplace. There are things Congress can do to strengthen the markets, to reduce costs, increase affordability and access. But we think it would be a mistake to erode those programs because, as Suzanne observed, this is something that people value very, very highly. And in the work that we've done, after wages, this is the next most valued benefit that employees find when they're part of a relationship with an employer. And we don't want to jeopardize that. So we ought to be moving very, very thoughtfully. And there may be ways to enhance what we do now, but we shouldn't be throwing it out and starting over. That'd be incredibly disruptive. And at a time like this, I think it could have really dramatically negative consequences for those employees and those families that need it and rely on it so very much.
Thank you. And Kurt, with manufacturing, agriculture, and healthcare being the largest industries in Wisconsin, what concerns you about the Medicare buy-in or public option, and how do you foresee the impact of these proposals on your state economy?
For that, let me echo what Matt said. I very much appreciate being a part of this, and I just want to praise the U.S. Chamber for tackling this issue. And the U.S. Chamber has just been such an incredible resource during this COVID-19 crisis for all of us in the state chamber and the local chamber community. They've really been a great partner. So thanks for including me in this. Now to answer your question, we're a manufacturing state. We're known as agriculture. We've got America's Dairyland on our license plate, but we're 20% of our state GDP is manufacturing. And obviously healthcare, that's an important issue for us as we look at our demographics from a competitive standpoint in trying to attract workers. You've got to have a variety of things that you have as far as benefits to draw in talent and retain talent. Healthcare is obviously going to be one of them. And, we look at it from the standpoint that, we're talking healthcare. So let's invoke the Hippocratic Oath. First do no harm. If it ain't broke, let's not fix it. 95% of Wisconsinites have healthcare insurance. We're the second highest in the country, actually, with that kind of cover. And 3 out of 4 get their insurance from private employers. The system is not broke. And as Matt said, if we're looking at disruption in the healthcare system, this isn't it. I think that there are certainly ways that we can address that and reform it and make it better. And we can talk about that a little later on the panel. But I think this is just simply the wrong approach, and is going to have a dramatic impact, not only on the three sectors that you mentioned, but throughout the state of Wisconsin and all the sectors that we represent as the State Chamber of Commerce.
Thank you very much for that. In terms of helping maintain and supplement employee benefits during the pandemic, what have you seen employers doing to support their workers during COVID-19? Kurt, are there any specific standout examples within your state or other states that you've heard about?
Well, they've been doing a lot of different things. Obviously, in addition to being the state chamber, we're the State Manufacturers Association. We're also the state safety council. So one of the things that we've been able to do is help prepare workplaces, whether they're manufacturing facilities, office environments, construction work sites, to be ready for the COVID-19 environment, making sure that you're sanitizing, wearing masks, social distancing, all of those types of things. So the employers obviously want to make sure that their employees are taken care of. They want to make sure that they're safe. They want to make sure that they're healthy, and they'll go to great length in order to do it. And what we would argue is that the safest place people can be from a COVID-19 protection perspective is be at the workplace. There are a lot of different things that we're doing. Obviously, flexible work hours. We're doing that here in our shop. Almost everybody is in order to accommodate the particular instances. Of course, that's going to get a little bit more difficult as the school year begins to start, and many of the, particularly the urban districts, are going to start with online school. That's going to be a real challenge for employees and employers alike.
Indeed. Matt, how difficult has this been for retailers supporting hourly workers, and what solutions, if any, have they found?
Well, if we think back to what it was like in March and in this country, and we went into the initial phases of really closing down substantial portions of the economy, closing schools, eliminating travel, we really went into that lockdown phase. Many retail workers, millions of retail workers, and those employers really were the economic first responders. And those were the people that kept our economy moving, that kept groceries available, that supported those communities and those customers, the pharmacies that were open, all of the things that we were able to do to provide the sorts of things that communities and consumers rely on every single day and take for granted, we were able to do. And really, for the reasons, Kurt just said it, one of the safest places you can be right now is in a workplace, because we've learned so much, and we've gained so much experience in how to do this safely. And we've seen retail companies step up in really dramatic ways to support their teams, to support their employees, both for those that were able to stay open throughout the pandemic, and for those who, unfortunately, in our view, were forced to close their businesses because they were deemed to be not as high a priority in terms of the products and services they offered, but their employees were impacted just as dramatically. So for example, the overwhelming majority of those companies that were forced to close their businesses during the pandemic tried to find ways to furlough or otherwise keep their employees attached to the workforce so they could continue to provide healthcare benefits to them, so they'd still have access to the healthcare that they needed. For those other businesses, and much has been written about this, the millions of dollars that has been spent on enhanced wages, increased wages, on bonus payments, on access to healthcare, on 2, 3, 4 week medical leave to be taken for any reason or any concerns about being ill in the workplace, the access to testing, the partnerships with medical facilities and providers to support those employees, the tens, probably hundreds of millions of dollars that's been spent on personal protective equipment. So this has been a real opportunity for the retail industry to demonstrate its commitment to its employees. And one of the most fundamental of those commitments is the employer-sponsored insurance that those companies can provide. So in our view, employer-sponsored insurance is a fundamental component of the relationship between retail employees and those employers. And again, as Suzanne said about the movie theater owner, this is being viewed as, you're part of a family, you're trying to work together to support a community and your customers. And this is one of the ways that you take care of those families. And we've seen retailers step up in really substantial ways to make those investments and to keep supporting their team members throughout the challenges we faced.
I would think we can all relate to what you just said in terms of seeing what retail is doing. I know the few things that I do outside of my home are go to the grocery store and occasionally another realtor experience, retail experience. I think we've all seen during our days and our errands the incredible work that employers in that space have done to try to keep employees safe and the customers safe. So thank you for that. In 2018, an employee benefit survey noticed that 55% of people named health insurance as the most important benefit in terms of their job satisfaction. And Suzanne mentioned earlier that 86% of employees are satisfied with their employer-sponsored coverage. And we have a whopping 180 million Americans that enjoy that coverage. Matt, would a Medicare buy-in or public option put employer-sponsored coverage at risk for retail employees and employers, in your opinion?
In our opinion, it would. And we've done similar survey work. Recent survey that we did of our members, 100% of full-time and approximately 2/3 of part-time workers had access to employer-sponsored insurance through those retail companies. And I think, the work that you've done, the research, Alex did some of this research and referenced it. Suzanne hit the highlights of this. But, one of the great attractive features of employer-sponsored insurance is that it can be tailored to fit the needs of that workforce. And not every workforce, not every employer, even in the retail industry, not all employers are created in exactly the same way, even those that operate in the same segment. They might all be discounters, they might all be department stores, they might all be luxury goods, that they might all be supermarkets, all those segments, and they all tailor their own programs that fit their employees, that fit the structure of their business, that fit the way in which they serve their customers. And so, I think that's one of the concerns, of course, is that you would lose the ability to customize employer-sponsored insurance in a way that works for that business, whatever scale it might be, and whatever structure it might take. And then the other real danger, I think, and Alex touched on this when he shared his thoughts, what happens right now is because these insurance companies are able to take these communities and ensure that the risk is appropriately insured. And if you create an environment in which you're going to pull a certain cohort out of this pool and leave the employer-sponsored plans with incredibly expensive pools, you might have two bad things happen. One is the employer-sponsored plans would be so cost prohibitive that they couldn't be offered with the same access or the same pricing or the same benefits and coverage that they currently are. And then, Katie, for the reasons that you observed and talked about the reimbursement rates for Medicare, they're so much lower that you would end up driving medical and healthcare professionals, in many cases, as the research suggests, nearly 50,000 doctors just in a period of a very few years, right out of the healthcare system because the reimbursement rates are so low. So you would create stress and strain at both ends, I think, both for this new program and for the employer-sponsored programs that get eroded. And that would have negative consequences, forever. And so that's what we would go back to. As Kurt said, first, do no harm. There are 180 million Americans here. It's highly valued. It takes care of these families. I think we all agree there are things we could do to enhance it and improve it. We should start there and not start by simply throwing it all away and moving to some other untested system, especially at a time like this.
One of the reasons that the Chamber is launching PACT today is to speak from the voice of business to business. And I think we've heard a couple of really important points that we want businesses to hear. Number one, if folks are thinking that Medicare buy-in option might provide an alternative for their older, sicker workers that might in some way improve their risk pool, clearly that's not what the economic analysis is showing. It's showing that it may potentially harm the risk pool that remains in the employer-sponsored system, and see premiums, therefore, in the employer-sponsored system go up instead of down. Secondarily, as we just discussed, Matt, the reimbursement rates are so much lower in Medicare. And if you have more people enrolled in a program that pays pennies on the dollar, the cost shifting is going to be exacerbated. So beyond sort of the risk pool dynamic and the element on premiums, the cost shifting is likely to be pretty tremendous as well. So I'm thrilled to have this discussion with you both and really appreciate your insights on those secondary and tertiary effects that are really quite damaging. Kurt, what about Wisconsin's 440,000 small businesses? How would they be affected?
Well, as I mentioned, 3 out of 4 people in Wisconsin get their health care through their employer. And I represent 3,800 businesses. The vast majority are small businesses. They have under 100 employees. So it would have a profound impact. And I really want to emphasize what you just said and what Matt just said about that cost shifting. We call it the hidden healthcare tax, and it's particularly bad in Wisconsin, where Medicare doesn't reimburse to the same level, and then we see the insurance and healthcare providers shift that over on employers. And then let's not forget, employers are very often forced to shift that onto their employees in terms of higher premium deductibles and co-pays. So let's not forget. It's not just on the employer. It also trickles down to the employee at some point, because you've got to be able to manage those costs as best as you possibly can. And particularly in this environment with an economic downturn that we're seeing, employers are forced to do that. So I think the impact on small business would be even perhaps more profound than the larger businesses. It just is something that we really have to be mindful of. And public policy people have to understand something that I learned 30 years ago when I was just a fresh lobbyist, the law of unintended consequences. There's always going to be a consequence that you weren't expecting. There's going to be a profound one here if we go down this path.
Thank you. Matt, here's hopefully a silver lining or happy question that lets us talk about something optimistic. Can you share a little bit about what the most helpful thing Congress could do or has done, hopefully has done already, to help retailers during this time? What about retail workers who've lost their jobs and had their hours reduced significantly? Has there been tremendous or any assistance provided yet? And are you looking for some in the future?
Well, yeah, I was smiling at the prospect of having a more optimistic conversation. Also, at the thought of Kurt 30 years ago as a lobbyist, because I can't believe he's been doing it 30 years. Looks too good for that. I can't imagine you survived the state capitol for 30 years and came out looking so unscathed. But yeah, Katie, I think a couple of things. With regard to the requirements under the Affordable Care Act. The requirement to mandate coverage, obviously that increases costs and puts some limitations on what employers can do through the exchanges. The definition of the work week, we think distorts reality in terms of the coverage requirements. But I think at a more general level, the kinds of things that we can do. That of course we want to increase accessibility, and we want to reduce expenses and increase affordability as well. But at some point we really need to get the incentives aligned in the right way, so that so we can really do some analysis of the care that gets delivered and the results that we are able to obtain. And ensuring that we spend the dollars the right way, whether that's for procedures or for anything else, and ensure that we're treating people in a way that we get the outcomes that we want, and we spend the money in a way that's directed to achieve real return on investment. And I think that's a place where over time, we can get better alignment. And if you think about the kinds of things that the relationships you have with your expenses in other areas, this is one where lots of consumers of healthcare, they see it as a real benefit, but there's not a real direct relationship between the consumer and the cost. And I think getting alignment so that we've got everybody aligned and how do we get results, I think would be a place we could all devote some time to. But again, going back to those 180 million, that 100% of full-time and 65% of part-time, there's so many in the retail industry that obtain their health insurance through their employer that we don't want to risk eroding or damaging the existing system. We'd rather see improvements than see big dramatic wholesale changes and moving to another entire system.
Thank you. And Kurt, on the state level, what type of relief or support have you seen or do you expect to see from the state legislature? Do Wisconsin businesses feel like they're getting what they need at the state or federal level? How about workers?
Well, that's I could talk about this for a while. We had CARES Act money that went to the state, and unfortunately, some money was dedicated for loans at $2,500 a piece for businesses, which we thought was rather small, not very helpful. The administration decided that they were going to do substantially more for local government, so that shows you where their priority was. Bottom line, from our perspective, what we want more than anything is normalcy as much as we possibly can. We have a face covering mandate right now in Wisconsin. We're looking for clarification on that because not all businesses are created equal. It's one thing to have face covering rules for retail and office environments, but when you're talking about manufacturing, and we're a heavy manufacturing state, as I said earlier, or construction sites, it's a lot different and it gets a lot more complicated. And sometimes those orders conflict with what the CDC or OSHA have already put out there. So we're looking for clarification. What we really want from the legislature and what we want from the Congress is liability protections, because of course nobody wants to be sued because an employee or a customer contracted COVID-19 and claims it was at your particular workplace when they have no proof of it. Businesses need those types of liability protections, but of course, as you know, Katie, it's not just private sector businesses. Healthcare providers need this, and of course, K-16, the schools, the colleges, the technical colleges, they all need that as well. So we really need Congress, we need state legislatures to provide that in order to get as much normalcy as we possibly can to get back to work. One other thing I'll just mention is that with the expiration of the $600 federal supplemental to unemployment benefits, we would prefer that not be continued. And frankly, we think that what the president did on Saturday, while admirable, $400 a month is probably too much as well. We were looking at what the Senate had offered, which is about $200 per month, because $400, $600, it turns out to be a major disincentive for people to go back to work, and we need people back to work.
And that touches on another kind of element of these interesting times that make today's conversation so timely. Not only are millions of Americans losing their jobs and potentially losing access to their highly valued employer-sponsored coverage, but we're seeing a Democratic presidential candidate and vice president that are very interested in pursuing and advancing Medicare buy-in and public option proposals. At the same time, we're as a country trying to struggle with how can we help those individuals that have lost their access to their employer-sponsored coverage. Are they going to go on Medicaid? Are they going to buy coverage in the exchanges? Will they be subject to a brand new deductible, having to navigate new provider networks, new drug formularies? We as a country, and I know the Chamber has strongly supported the notion of providing federal subsidies for COBRA for a timely, temporary and targeted basis. And I think that reinforces with the statistic that Suzanne mentioned, which is 86%, 81% of individuals support a federal subsidy of COBRA. And I think that goes to the underlying issue that we're discussing today, which is where do individuals want to access and receive their health care coverage? Is it through a government program or is it through their current employer-sponsored plan? So I'll ask a last final doozy of a question. In your opinion, what is the most impactful thing Congress can do to advance healthcare in the U.S. over the next 4 years?
Kitty, I'll take the under, and I'll say in the next 4 months. And I'll say Congress could enact the Healthy Workplace Tax Credit and ensure that employers like retailers and all of Kurt's members and all of your other members can obtain a tax credit for the tens and hundreds of millions of dollars they're spending to keep their employees safe and healthy in the first place, so they don't even need to access insurance. And so we can keep the economy moving, so we don't have to keep paying unemployment insurance, and we can get people back to work safely, and we can turn the economy back on and reach its full potential. So I think, you know, the old one about for the want of a horseshoe, the kingdom was lost. If we could just focus on let's hit a few singles in a few places, and a healthy workplace tax credit, I think, would be one of those things that would go a long way in the near term, in the immediate term, to creating the right incentives, creating the right alignment to protect employers and employees. And then the one Kurt talked about, some targeted, as Neil has said before, targeted, timely, temporary liability protections to ensure that businesses, as they reopen, they take advantage of this tax benefit of the healthy workplace tax credit. So they have the incentive to continue to follow the right protocols, and they get protected from frivolous lawsuits that might result from their reopening. I would say those would be two good things we could do in the very near term.
Thank you. I certainly agree. Kurt, I'd be interested in your thoughts.
Well, I would go just the opposite of what this proposal is. That more government is not the answer. I think more markets, more free enterprise. You know, the motto of the U.S. Chamber is the spirit of free enterprise. I believe in markets, and I think that we need more competition. We need more cost transparency. We need more quality transparency, and we need incentives for consumers to go out there and look for a good deal and the best quality for a service. And right now that's very difficult, and we need to see more of that. If we can incentivize consumers to be good consumers and have the right information so that they can make the right choices about the cost of a service and the quality of the service, I think you'd see a lot of those prices be driven down just by pure competition. Competition solves a lot of problems.
Thank you, Matt. Thank you, Kurt. Really appreciate your time today. Please stand by for our question and answer session.
My name is Dana Bredenberg, Manager of Health Policy at the U.S. Chamber of Commerce. Let's now begin our question and answer session. If you'd like to submit a question, please do so via the Q&A tab, and we'll get to as many as we can. Looks like our first question in the queue is for Katie and Neil. What about the current employer-sponsored insurance system has been the strongest element of the program, particularly during the pandemic? And would you encourage policymakers to build on, what would you encourage policymakers to build on from the ESI program instead of focusing on a government-run program?
Katie, I'll let you go first.
Thank you. As an employer of nearly 500 people, the Chamber offers healthcare coverage to its employees and families as well. And so I'm one of those 180 million Americans that enjoys getting my coverage through my employer. And during the past 5 or 6 months, the Chamber's made important changes to help employees like me during this pandemic. And I imagine that the Chamber is not alone as an employer in making some of these very, very important changes. The Chamber has waived cost sharing for all in-network telehealth behavioral visits. They've waived cost sharing for all virtual visits, regardless of diagnosis, retrospective back to March. Telehealth visits related to COVID are available at no charge until October, which may be further extended. We've also been given additional flexibility in the use of our FSA dollars from 2019. These are some examples of the flexibility that coverage that's offered by an employer can provide, and that demonstrates the nimbleness of getting coverage through an employer that may make changes to respond to a current pandemic or crisis. And I think that those are the things that policymakers should look to build on rather than expanding Medicare.
Katie's exactly right. And the only thing I'd add to that is I think Kurt and Matt were discussing how employers really care about their employees and they want to protect them and they want to make sure that they have access to good quality health care. And that personal relationship, the fact that your employer is working with you, not just in times of a pandemic, but overall to make sure that you have a health insurance system that meets the needs, your needs, and the needs of your colleagues. That's something you simply just don't get with a government program.
Great. Next question up in the queue is for Matt Shea. With retailers and businesses taking a hit from the COVID-19 crisis, how important is it for your members to be able to offer strong benefits packages, specifically healthcare coverage, to help rebuild and survive as the economy recovers?
Well, and I think it's absolutely critical. And, I mean, I referenced some of the things that some companies have done, and there's a whole, our communications team could send you the whole list of the steps that have been taken. I guess I would, as Alex did at the beginning, and then Neil did for context setting, and then Alex went one step back. I'll go two steps back and think about where this economy was on February 1st or January 1st of this year. We had the lowest unemployment rate in the history of this country, as long as we've been keeping track of it. We had interest rates almost as low as they'd ever been in history. We had consumer confidence virtually as high as it had ever been in history. This economy was poised to keep driving forward and creating economic opportunity, driving wage increases, increasing standards of living, keeping people at work. We saw more mobility in the workplace. People were confident about what the jobs that were out there. They were moving around. They were increasing wages. We got skills and training moving forward. So we were poised to really go. And in that environment, healthcare benefits and all the other benefits employers offer were part of the competitive advantage of trying to attract those employees. The competition out there for talent was very substantial. We'll get back to that at another point in time. We're not there now. We got millions of Americans we need to put back to work. We're making progress. We talked about a number of things today that we can do to keep making progress, but providing healthcare benefits through employer plans are going to continue to be one of those things that employees find attractive. And it's going to be something that creates incentives to work for some employers. So it's going to provide competitive advantages for those that have the robust plans. I think it'll continue to be absolutely fundamental, both in the near term and as we go forward.
Thank you, Matt. Moving on to our next question. Pose this one to Kurt, but others can feel free to jump in as well. How big of an issue would Medicare buy-in pose for the competitiveness and employee recruitment and retention?
Well, I agree with what Matt said. I think it would be a big disruption. As I indicated, I think in the answer to my first question, like most other states, we have a workforce shortage. It's particularly pronounced here in the upper Midwest, where we have demographic challenges. We have low birth rates, and we have more people leaving the state than coming in, which means we need to attract workers and we need to retain those workers. And healthcare benefits are part of that fringe package that you need to put together to be competitive and have that stickiness that you need with your employer, the employee with the employer. So I think it can't be overstated how important healthcare coverage is provided by the employer. And there are other things that are important as well, but I really think that that's one of the core. I mean, the first thing that when somebody's interviewing with me to work at our organization is that they ask about what kind of benefits do you have, because they have a family, they've got pre-existing conditions. I mean, those are fundamental things that you want to take care of. Salary is important as well, and there are a variety of other things that are considered, but really for the vast majority of people, they're going to want to know exactly how good the benefits are for healthcare.
And we've got one last question left in the queue here. Pose this one to Alex. You've talked about the impacts of various players in the healthcare system with a shift to public option or Medicare buy-in. But who will really be impacted the most if we as a country move away from employer-sponsored health insurance?
Who has the true short end of the stick? It depends in part on the scope of the reform proposal and the uptake, the degree to which the government chooses to subsidize the cost of people purchasing Medicare outside of the employer provided plans or not, and what age plans kick in. It's been suggested to bring the age down as low as 50. So larger programs will have exponentially larger impacts on the economy overall, on the healthcare sector overall, and on the employer benefit and employer provided benefit overall. But what we should keep in mind is that as these programs, as these proposals grow, we need to think not only about the consequence it has on employers, but also the consequence it has on the federal fiscal situation, right? We're borrowing trillions of dollars a year. Even if our economy recovers, we're set to borrow over $1 trillion a year. Increasing the size of the Medicare program and thereby decreasing the size of employer insurance is, as many people at this event have said earlier, solving a problem that doesn't exist, right? And we do have problems that do exist, and particularly we're in the middle of a pandemic. So we'd be much better off focusing our intellectual capital and our scarce resource dollars on addressing some of the near-term challenges that we have as workers transition in or out from their employer, and as people need access to PPE and healthcare and testing and a whole set of very acute challenges, and not disrupting a structure that's worked remarkably well over many, many decades.
Thank you. Now, I guess if we have no more questions, we can continue on with the program.
Well, I just, on behalf of Anna and Katie and Suzanne and all of my colleagues at the U.S. Chamber, I just want to give a special thank you to Matt, to Kurt, and to Alex for joining us today. You know, as Suzanne mentioned at the top of the program, today we're launching Protecting Americans Coverage Together. This is not just one event and one forum. This is really a campaign designed to ensure that as policymakers and the American people consider all of the changes that are being thrown around to America's healthcare system, that the discussion is driven by facts, that is driven by an understanding of the implications of the changes that could be made, not just on the federal fisc, not just on an individual, but on other individuals, on our colleagues, on our families, on our healthcare providers, on the innovation that Alex spoke about and the creativity that's driving every day new ways to treat illnesses. All of these things are interconnected. And as I think it was Kurt who said, you know, abiding by the Hippocratic Oath here and doing no harm. And the best way we can do no harm is to make sure that we're really informed about the consequences and the parameters of the policy changes that are being discussed before we actually agree to move forward with them. And so I want to thank you all for joining us today. I encourage you to stay in touch with the U.S. Chamber, with our colleagues at the National Retail Federation, with our partners at the Wisconsin Manufacturing and Commerce and other chambers across the nation to make sure that we have the type of discussions that we need to have to ensure that we protect the health care that 180 million Americans rely on. With that, thank you, and I hope you enjoy the rest of your day.